talking about a powerful candlestick pattern known as the inside bar, which can be a very effective way to trade momentum in the market. I'm going to break down exactly what this pattern is and exactly how you can apply it to your own trading, so make sure to stay through the entire video. You're not going to want to miss out on this because I've used this exact pattern to make thousands of dollars in the stock market with my own personal trading. So let's go ahead and get started. What is an inside bar? Well, for those of you that are familiar with different candlestick patterns, you can kind of think of an inside bar as the opposite of an engulfing candlestick. And with an engulfing candlestick, what we see is it's going to be a candlestick that completely surrounds the previous candlestick. So essentially, an inside bar candlestick is going to be the opposite of that, where we have a smaller candlestick that is going to be completely within the range of the previous larger candlestick. And this can look like the examples that we have down here at the bottom of the screen, but obviously there can be different variations of this as well. It is going to be an inside bar still as long as that candlestick is completely within the range of the previous. Okay, now this can be applied to any time frame, so these candlesticks can be representing 1 minute of price action, they can be 5 minutes of price action, or they can be a longer term time frame like the daily chart, where each of these candlesticks would then, of course, represent an entire day of price action. The time frame is really going to have a big effect on the way that you trade this pattern, but the same trading concepts are going to apply to any time frame. All right, now before we move over to the trading platform and look at some real examples, I want to just break this down a little bit further to show you how I would actually look to trade an inside bar breakout. Right here we can see we clearly have ourselves an inside bar. This smaller candlestick is completely within the range of this bigger candlestick. And what this smaller candlestick is going to do, or at least the way that I like to trade this pattern, is it's going to give us a breakout level and it's going to give us a risk level. And those two levels are simply going to be from the high and the low of that inside bar. Now, because this initial bar here is going to be to the upside, it's a strong move up, the way that I like to trade the inside bar is to look for then a breakout or a continuation of that first move. So I would look to go long on the breakout above that breakout level, using then the low of that inside bar as a risk level. And obviously nothing is going to work 100% of the time in the market. There's going to be false breakouts, and there's going to be times where it might look like it's a perfect breakout and you're going to be, making money from the momentum, but the trade ends up failing and it reverses backwards on you. So just to show you an example of what this might look like, we could see that there might be occasionally a very quick false breakout above that breakout level. And if you're not quick to take profits on that breakout, you may end up taking a loss on the trade. And at the end of the day, losses are 100% inevitable, so there is nothing wrong with that. What's more important is that you're managing risk so that your losses are still very small and very controlled. And that's where the risk level is going to come into play. Once it starts to break down below the inside bar's low, or our risk level in this case, that is exactly where you want to cut your losses and manage your risk for that position. So if we go ahead and apply that information to some real examples in the stock market, we could see that this is a really great and effective trading strategy because not only does it allow you to capture a large breakout, but it doesn't really require you to use any kind of scanner or any kind of screener, and it doesn't really require you to be very early to the trade, because if we take this example here with BIAF, BIAF had a big run here from a low of about 170 up to a high of 399 within the same day. And the great thing about this strategy is BIAF doesn't even need to be on our radar for that day in order for us to capture a move using the inside bar breakout trading strategy. So what we can do is we can just look at the top percent gainers from the past day or the past couple of days. We can put all of those stocks in a watch list, and we can let them trade the following day to see if they form an inside bar, and then we can simply look for a breakout the next day, just like we see here with BIAF. If we go ahead and draw a box around this, we can see we of course have our main bar, and then we're going to have our inside bar here, and then we get a breakout above the high from that inside bar, and it pushes from that breakout level at about 285 up to a high the following day of 367. So it goes up over $1 per share from the breakout level, and you can see it never pulls back and it doesn't even reach the risk level, but it is there in case we do have to manage risk on that trade. Another example that we can take a look at is BWEN. BWEN, we can see there was a big gap and go So if we go ahead and draw the breakout level and then the risk level here using the inside bar, that's going to be our breakout level, and the low is going to be our risk level. We can see, of course, we get a breakout to the upside, and it runs from the breakout level of about 474 up to a high the following day of 565. And then it kind of consolidates, trades sideways, ends up hitting a high of $6.10. So just those few examples show how effective this trading strategy can be. Now both of these have been examples on the daily charts, but like I mentioned, you can use this same pattern on any time frame. So you can also spot these patterns on the 5-minute charts or the 1-minute charts, and those are going to be more effective for very short-term scalp trades. But regardless, I would recommend looking for this pattern, even if you're using a shorter-term time frame on your charts. Now, before you click off this video, stay put because I do want to show you now how you can use this exact same strategy to also make money when a stock goes down. So because this is a pattern that, in my opinion, is best traded with momentum, momentum can of course be to the upside or to the downside. So another great way to trade the inside bar pattern is to look to short sell if the momentum happens to be to the downside. So here we clearly have an example where the momentum is to the downside. We get ourselves a big downward candle. Following that, we get ourselves an inside bar. And of course, when we short sell, what we look to do is take profits as a stock moves lower. So that means that as a stock goes to the upside, that is going to cause us to take a loss on that short position. So in this case, our risk level would be to the upside, and we would be using the high of the inside bar as our risk level. On the other hand, our breakout level in this case is going to be to the downside as we're looking to capture that downside momentum. So we would look to short sell the breakdown below that breakout level and ride that momentum lower and lower. I've found that this is most effective if the stock is in a clear downtrend as opposed to there just being one single big downward candlestick. If the stock is trending lower and lower throughout the day, that to me is going to be a better breakout to short sell as opposed to a stock that might be trading sideways or isn't clearly in a downtrend at the time. So back over to Thinkorswim now. I wanted to give an example with a stock that has downward momentum for us to short sell, and also on a shorter term time frame as opposed to the daily chart. So if we take a look here at Tesla, this is a great example because this also proves that this can be applied to options trading as well. You could look to, instead of short sell this stock, buy put options in this move, and that would be a great way to go about capturing the downward momentum that this stock has. But what we can see here is the stock kind of trades sideways out of the market open, and then the direction starts to become very clearly to the downside. And we can see that right here, these two candlesticks are going to be our main downward candle, followed by our inside bar. So if we draw the risk level and then the breakdown level for this inside bar, we can see that if we zoom in a bit further just to make this a bit clearer, we get ourselves a breakdown below the breakout level. That's going to be our signal to short sell. And we can see it falls then from that breakout level of about 172 per share down to a low just about 20 minutes later of $168.30. So it falls about $4 per share from that breakout level. Depending on the expiration date and the strike price that you're trading for your options, there were most likely some put options in that time frame that were up 30, 40, even 50% or more just from that small move from this inside bar breakout. But that is again how effective this strategy can